Hey viewers, you're watching The Savera and I am Vidhi Joshi. On Tuesday, May 20, 2025, the Indian stock markets declined for the third consecutive session, likely driven by ongoing profit-taking as investors remained cautious while awaiting progress on the India-US trade deal. Commerce Minister Piyush Goyal, during his current visit to the United States, held what he described as productive discussions with US Commerce Secretary Howard Lutnick to accelerate the first phase of India-US bilateral trade agreement. As per the current stats, Sensex closed at 81,191.51 points, down 867.91 points or 1.06%, while Nifty closed at 24,684.85 points, down 260.60 points or 1.04%. All the sectoral indices were deep in the red, with auto, FMCG, media, pharma slumping the most. Nifty India Defence slumped 2.4%. Gold, a key indicator of financial sector, was trading at USD 3,238.50 per ounce, up USD 5 or 0.15%. Sensex is now some 4,000 points below its all-time high of 85,978 points. On Monday, Indian stock indices extend losses over profit booking. Sensex Nifty down 0.3% each. Last week, the indices traded in the red. The declines are possibly due to the profit booking following the latest rally. Sensex is now some 4,000 points below its all-time high of 85,978 points. NSE data showed that among the sectoral indices, Nifty, IT and Nifty Media were the top losers, while Nifty PSU Bank, Nifty Realty and Nifty Pharma were the top gainers. According to Shrikant Chauhan, Head Equity Research, Kotak Securities, Sensex is now some 4,000 points below its all-time high of 85,978 points. Among sectors, all the major sectoral indices registered intraday profit booking at higher levels, but defense, auto indices lost the most, shed over 2%. Technically, after a positive open market consistently witnessing selling pressure at higher levels. Vinod Nair, head of research Geojit Investments Limited, said, with the lack of major positive triggers and prevailing uncertainty over US fiscal stability, investors opted for profit booking and adopted a cautious stance. Selling pressure was widespread as participants awaited more clarity on the India-US trade agreement. Given the current premium valuations and delays in the trade deal, we foresee a phase of short-term consolidation which may lead FIIs to scale back their position in the domestic market. Indian stock indices soared early last week, supported by the news that the conflict between India and Pakistan had de-escalated after the two armed forces reached an understanding to stop the military actions. Another shot in the arm came from the easing of trade wars between US and China. They had agreed to withdraw their previously announced reciprocal tariffs and counter-tariffs for an initial period of 90 days. For Indian stock markets, key monitorables going ahead are Q4 GDP numbers and global cues. The official GDP data for Q4 2024-2025 is scheduled to be released on May 30 by the National Statistics Office, along with the annual GDP for 2024-2025. During the April to June, July to September and October to December 2024 quarters, the country's economy in real terms observed a growth rate of 6.7%, 5.6% and 6.2% respectively. As per the second advance estimates of NSO, the country's economy is projected to grow at 6.5% in 2024-2025. That's all for now. Stay tuned to The Savera for more updates. Do like, comment and subscribe to the channel.